Welcome back to the Rentvesting Podcast. If you missed last week's show, we spoke about the major residential property markets. So here's a quick summary to recap. Sydney, it's still smashing it, as is Melbourne, and that's largely expected to continue. Brisbane represents value for money as the market is waiting around for a pop. Perth, it's probably close to bottoming out, and commodity prices recovering means good buying opportunities may be presenting themselves. So what's happening with the rest of the Australian marketplace? Well, that's what we're going to discuss today. Plus, I'll throw in my 2 cents on housing affordability, which will be one of the most talked about topics for 2017. So, let's get to it. While the market darlings like Sydney and Melbourne capture the majority of the spotlight, lots of outside activity actually takes place. Now, to start off in my own home state of Queensland, as I mentioned, Brisbane is perceived to actually represent value for money for our southern counterparts. But what's happening outside of southeast Queensland? Well, it's largely been in recovery mode, and this has been the result in what was really an unpredicted decline in the demand for coal from foreigners. You know, the Chinese market bottomed out, but the Indian market really showed some upside, and that's particularly around the $16 billion Adani coal project that has now been approved. That project, because of its sheer size, will give a real boost for far north Queensland. Townsville will probably do quite well out of this deal because of the influx of FIFO workers passing through during the construction phase of the project. This kind of activity should really help things bubble along and generally stabilise what's really been a bit of a volatile market because of high supply rates, property price discounts and the like. This positive upswing will also help improve rental conditions for the existing investors in the region that have probably been feeling a little bit of pain for some time now. Townsville might be the exception though, because even though commodity prices have staged a recovery, it's not really translated into a recovery for housing prices. Many mining regions are continuing to experience soft employment markets. There's lots of housing stock. There's low demand and plenty of additional owners wanting to, cut their losses and sell, or if they're not selling, they're considering selling. And there's actually just a general lack of buyers. So those that are selling and getting out are probably doing so at a loss from their original purchasing price. These areas really need to diversify their economies because being reliant on one market or, one employer, one industry type of thing really isn't sustainable for growth. Or alternatively, the sector will need to experience another boom in commodity prices and a boom in construction activity to really recover, which, disappointingly, probably won't take place for the foreseeable future, considering the last boom was described as one in a generation. Coastal regions, though, is really interesting because, the lifestyle of living on the coast is damn appealing to a lot of people, myself included. There's definitely been a growth in popularity for regional coastal areas, which means a growth in value. And it just highlights the fact that while these areas are considered regional, very different factors are at play, which is really spurring growth along. If we look down south, Adelaide remains one of the most affordable cities for property nationally. The current low interest rate environment, though, has done, little to actually pop up the property market, largely because the economy really hasn't been firing. The attention, the state is currently grabbing is largely based because of an energy crisis. Infrastructure projects that were earmarked have subsequently been mothballed. The labour market is quite soft as well. From what I read and from what people tell me that I speak to, it appears that the Adelaide property market will probably remain quite light on for growth until some fundamentals really start to improve. Now, Adelaide's top-end friend Darwin enjoyed the spoils of the gas boom and the construction activity that happened during that time, and it's that construction activity is starting to wind up and the economy is really going to need to transition. Location, though, is probably what's going for Darwin in that it's really close to international Asian markets. It's a key defence post as well and, a key resource export point. This will all need to be supported by services, so the labour market should be okay. However, in my opinion, growth has slowed and better opportunities could be available elsewhere. Now, in our political leader's hometown of Canberra, things are going pretty well. And that's due to, good economic activity. Unemployment is low. It's absorbing the apartment stock that's been floating around, and wages are high. And this helps tick the criteria of what some politicians like to quote as saying that you really need a good high-paying job to buy a property. Well, it appears in Canberra there's plenty of people earning a good income. So by that rationale, affordability shouldn't technically be too much of a worry down there. Down to Hobart, which admittedly has some of the most affordable property of any capital city in the country, and has experienced a bit of a pop in popularity. And the reason for that is that the market has been pretty held back, and the reason is because the economy hasn't performed overly well for some time. And this has meant that construction has actually been low, which has resulted in supply issues, meaning that rents have shot up quite high recently. So if you're looking for positive cash flow properties, Hobart might be a good hunting ground for you. Now, with any investment decision, it's always highly recommended to do your own due diligence and seek professional advice wherever possible. I've tried to give you an accurate representation of what's currently taking place, but because you've heard it on the grapevine, it doesn't necessarily equal sound advice or enough to make a decision on. So check it out for yourself and seek advice wherever possible. Now, to move on from my little disclaimer, let's move on to affordability. It's becoming a daily conversation piece, from political debates, media reports and interview, social media. God, Facebook seems to be on fire with little debates raging here and there. The concern is real, and the argument of how best to deal with it will likely rage on for some time. Now, if I was a betting man, throughout 2017, I think we're going to see a lot of action around this issue. It's going to be interesting to see who actually assumes the role of housing minister to take on this issue. It's going to be a real hot potato, which will probably make or break someone's career. There are many factors out there that impact housing affordability, which I don't feel that a lot of people don't give a lot of attention to. They focus on scrapping negative gearing, which I believe will probably do more harm to the economy than good. Another major argument that floats around is supply. Now, on this side of things, government policies associated with housing supply and land releases have a profound impact on the cost of housing. Developers actually pay really high fees to the government, and that has a flow-on effect to the cost of new housing. Plus, more recently, construction costs have really spiked, which again jacks up the price. Now, these new greenfield areas, they're popping up, but they tend to be poorly supported by sufficient transport services linking other areas, which is a problem. To talk supply, we have to talk demand, and demand has grown rapidly. Migration has pushed this along, particularly in Sydney and in Melbourne. Investment has also pushed prices north. People have been piling into bricks and mortar because, you barely get anything leaving it in the bank. Shares have had a bumpy ride and money's cheap, and rates are anticipated to stay low at least into the short to medium term. So purchasing costs do add another hurdle, with stamp duty really being, another layer in what is already, quite a challenging entry point. Now, addressing the issues of housing affordability is a tough one. Multiple concurrent aspects are at play, and to help improve things, government at all three levels need to cooperate. The private sector needs to chip in as well. They need to play a really important role in this. Now, if cooperation is actually achieved, you would hopefully get better outcomes with new land releases, improved planning regulations, new infrastructure, better job opportunities in areas where housing costs are actually lower. Now, this isn't a pipe dream. I believe it's all within the realm of reason. It's going to take a lot of time to put into place, though, and a lot of time to actually have a real positive effect. Waiting around for this to happen, though, may mean that you end up missing the boat anyway. The market will continue to move ahead, and if you are renting, you do need to be investing to position yourself to benefit for potential affordable housing solutions that could arise in the future. Now, I'm really interested to learn more about, what the listener base actually feels about the affordability issue. I would love to hear your thoughts about whether rentvesting as a strategy is also contributing to affordability issues as well and just creating cities of landlords. So please don't be shy. Get in touch with me and send me a one-liner or two and send it directly to peter@rentvesting.com.au. I answer all my emails from my listeners, and I would love to hear from you on what you think could be done to potentially ease affordability constraints that are actually preventing people from breaking into the housing market. That email again, peter@rentvesting.com.au, and be sure to hit the iTunes subscribe button to keep this show alive. And until next week, bye-bye.